Hello and welcome back. We are in our new 10:30 session, Global Digital Payment Systems, Banking the Unbanked, with Mr. Pierre Ferrari and Mr. Dante Disparte. This session, the secret session word we have today is uplift, UPLIFT, uplift. At the end of this session, you'll have a chance to enter that in the poll to win some points on our game today. And so first, I want to just say that this topic is very near and dear to me. I personally help Heifer International, one of our representatives today, Pierre, his company as a blockchain advisor. And so they're doing a lot of great work with their blockchain initiatives. And I encourage you to check that out later today. Heifer International helps solve world hunger and poverty while caring for the earth. And so it's my honor and pleasure today to introduce first Mr. Pierre Ferrari, the CEO at Heifer Project International. Pierre joined Heifer in 2010 with more than 40 years of business experience. He worked for quite some time at Coca-Cola USA before deciding in '95 to focus his energies and business acumen on social issues. So Pierre is a former chair and current board member of Ben & Jerry's Homemade Ice Cream Fund Act and a former board member of Small Enterprise Assistance Fund. He received a master's degree in economics from the University of Cambridge and a master's of business administration from Harvard Business School. Welcome, Mr. Pierre Ferrari. And next, our other session co-host today is Mr. Disparte. He is the head of policy and communications at Libra Association. Dante Disparte is the vice chairman and the head of policy and communications for Libra Association, a newly formed organization that has brought together social impact organizations and a diverse group of other leading businesses from all around the world to create low friction, high trust payment systems that empower billions of people across the world. Dante comes from the Libra Association with 2 decades of experience as an entrepreneur, business leader, and global risk expert. Most recently, he is the founder and the head of a risk cooperative, a strategic risk advisory and insurance brokerage based in DC. Dante also serves as an appointee on the Federal Emergency Management Agency, FEMA, National Advisory Council, and is a founding advisor of the Global Blockchain Business Council, as well as a senior fellow with the Blockchain Trust Accelerator. He's a co-author of Global Risk Agility and Decision Making and was recognized as one of the 40 leaders under 40 by the Washington Business Journal in the inaugural Power Meter 100 list. So we have both experts in sustainability and development and blockchain applications here with us today. Guys, I will let you take it away and just let me know when you are ready for some questions.
Okay. If I may, I'm actually going to ask, thank you, Catherine. And by the way, we wouldn't be able to do our blockchain work at Heifer if it wasn't for Catherine. So thank you for that help. She's been instrumental in doing that. I was actually going to turn around and ask Dante a question. And we were just talking about it in the green room. Regarding a very influential economist, Hernando de Soto, who talked about land titling and releasing or unlocking trillions, I'm using the T word, trillions of dollars worth of assets that could be used in everything that we're doing. So, Dante, I know I'm kind of putting you on the spot here, but I thought, you know de Soto, and it'd be good to explain to the audience what he's proposing, and then we can talk about blockchain and its implementation and how it can actually do the very work that we're trying to do, which is to make financing available to hundreds of millions of smallholder farmers who simply don't have access to finance.
Yeah, well, it's great to see you again, Pierre, and great to join this audience virtually. Hopefully next time around we'll all be in person because I think we're all pandemic weary at this point.
Oh,
so I think Hernando, right?
Yeah.
Hernando de Soto espouses some really big ideas that in many respects, when they were originally promoted, were ahead of their time, in part because like all big ideas, not only do you need the policy environment to catch up, you also need, in some respects, the infrastructure to catch up that enables the big idea to then become plausible. And that notion is that there are trillions of dollars of stranded assets, for lack of a better way of putting it, or stranded value captured in land. And with it, of course, if you think about how land and land ownership and the clarity and the trust we have in land titling in advanced economies like the United States and elsewhere, it's not only part of the lower rungs of the ladder of economic mobility, it may very well be the floor on which that ladder stands. And so I think enter the realm of blockchain technology, and one of the earliest and most widely applied use cases around the world, countries like the Republic of Georgia, for example, have used blockchain-based land registries in order to ensure that the superpower of this fundamental technology, which is to effectively record indelibly and irrevocably a transaction, and in this instance, a transaction of really long-range value, in a decentralized fashion so that it's unalterable. And in that manner, it not only will follow the end user, I think with my FEMA hat on, it also implies a really deep sense of disaster proofing, right? So in an informal setting, land titling is a pathway to value, maybe the floor on which the ladder of economic mobility can stand. But in an advanced economy setting, I think there are also a range of use cases, including ones that I've helped promote at FEMA, for using blockchain-based registries as a way of improving identification of homes in a disaster, and able to mobilize and speed up the process of providing insurance payments and others. So there's a range of use cases beginning with that fundamental ledger.
Yeah, I want to go a little bit to the psychosocial aspect of this thing. I remember a visit I made to a farmer in Uganda. And land ownership, land titling there is very complicated because you've got government ownership of some land, you've got the traditional chieftain ownership of land, and then you've also got private ownership. And so all of that needs to be sorted out in some way. And you're right, it's a policy environment is complicated. And of course, a lot of interest that want to keep things as they are. But I remember visiting this farmer, and we had trained that family in dairy farming. We'd actually placed a couple of cows, and they were taking care of the cow and feeding it well and keeping it healthy really well. They owned the cow. The farm itself, though, was a disaster. It was just unkempt, and they didn't care, and they were just living off the cow and some other activities that they had. And I remember the farmer talking to us and said, "Well, I don't own this farm. I don't own this land. Why should I improve it?" And in fact, his goal with his wife was actually to save as much as possible to go buy some land. So this is an important issue, and it links back to access to finance, right? A lot of farmers, depending on the commodity, it's less true of dairy farming, but very true of a lot of agricultural commodities, because there is seasonality to it. The family requires either payment up front, or there's a huge amount of working capital required. And the banks are today, in areas where we work, and we tend to work with the poorest of the poor, are not willing to lend working capital or seasonal capital or input capital or anything else, because they see them as huge risks. With blockchain and clarity on titling, suddenly the banks are very interested. And we've got a couple of tests going on in Honduras and Malawi. And I think if we can do this, if we can pull this off, as well as other people, we're not just alone on this, it just changes everything, absolutely changes everything. So at least on the access to finance piece, collateralizing, essentially, that's what we're talking about. I've just bought a house, so I know what collateral land is about.
Indeed. Well, and what you hit on,
mortgage company owes me completely,
There you go. What's the old expression, right? If you owe the bank $1 million, the bank owns you. But if you owe the bank $100 million, you own the bank. Right. So, I think you hit on, in the Uganda example, you hit on another really important issue, which is that how then can we monetize the asset, either through collateralizing it or using it as leverage, the way the rest of us might be able to take advantage of things like home equity, in an environment where the traditional trust instruments that we rely on in advanced finance, i.e. a mortgage originator going to your home, or very widely understood markets, is to acknowledge that in so many ways, the traditional financial infrastructure that we rely on has reached a point of diminishing returns, right? That if to be banked means to have access to brick and mortar, in the same way that if to have access to the telephony systems means to have access to fixed line infrastructure, then effectively there will continue to be billions of people on the margins of those systems, right? So I think one thing that's really promising about these big ideas, and what's really promising about the core foundational principle of blockchain, is that trust can scale, and you could begin to disintermediate a lot of the trust brokers that you and I might have confidence in or trust in, and that are critical to a transaction. If you could start to eliminate a lot of that friction and intermediation without necessarily sacrificing the outcome, you could then underwrite things very differently, right? So I think in addition to the land being sort of a core layer here, the other big opportunity that blockchain enthusiasts are promoting, and the technology I think is definitely coming of age, is this notion of digital identity and digital authentication.
Yeah.
So that not only will you have the land recorded in an irrevocable way, you will also have an ability to identify the owner, similarly leveraging these types of technologies alongside with things like biometrics and others. And so when you connect those two dots, I think that then gets you to the second rung of financial mobility, which is to have title to something that's of value and to be able to identify yourself to it. Therefore, you can now use it as a form of leverage or a form of monetization.
In addition to that, in terms of the leverage that you've mentioned, once you've got a sense and you've got some information about the farm and the farmer and the farmer's family, you begin to see what the potential could be through a co-op or some kind of collective action. Because you could see, for example, that a particular community has got in total is farming several thousand acres, but the productivity of that land, because you'll have all that information, right? You'll know exactly how much corn or soy or whatever beans is maybe a tenth of what it could be. And now you begin to be able to identify the kind of interventions that could actually be very profitable for that community. And that's part of the work that we're doing. And without those data, it's very difficult. You almost depend on anecdotes and shifting data. And the farmers, by the way, the farmers we're working with are very willing to participate and share the information. They see it with better clarity than I do, what the advantages could be for them. And of course, it could help on pricing by negotiating collective sales. And of course, on the input side, a potential supply can look at the data and say, wow, this is the market for X number of tons of fertilizer or seeds, and then we can negotiate better pricing. So there's huge advantages to having this identification that you're talking about.
And then that enters the third rung, right? Which is, if I feel like I have to reach the top of the loft behind you, Pierre. So, the third rung on this ladder of economic mobility is then to, pull people into the perimeter of payments and then the formal banking system. So this is the third tier in my mind. And here too, and this really gets to the crux and the heart of the Libra Association, of which Heifer International is an active member, is here too is the opportunity set and the big idea, and where blockchain really is a fundamental part of the architecture of this idea, which is that in a world with 1.7 billion people who are unbanked and nearly a similar number who are underbanked, and make no mistake, this isn't singularly a developing and emerging country reality. There are many, many millions of people in the United States that are plagued by these issues. That same world enjoys more than 1 billion of those people have access to a low-cost internet-connected mobile device. And the big idea is that if you could turn that internet-connected mobile device into a regulated payment endpoint, that would then facilitate the transfer of value with the type of ease the internet has facilitated the transfer of information or communications, you now have a radically different sort of set of opportunities. To pull people into domestic payment environments that are low cost and user directed, and then to pull them into cross-border payment environments that are low cost and user directed. To the farmer that we speak of in Uganda, this would pull them into markets, give them more control of that cash flow and money supply. And to the domestic environment, it then raises a whole host of business cases and use cases that have proxies and solutions like in M-Pesa in Kenya, and the mobile money movement, which similarly is an old idea that just hasn't necessarily reached the type of scale and population scale to be meaningful.
Yeah, fascinating. the other aspect from our point of view, of course, is actually the management of the farms and providing them with information on daily climatic change. It's actually daily climate matters, believe it or not, to farmers. If they're about to plant their corn and we can tell them, don't plant now, it's going to rain. That's helpful, et cetera, et cetera. So there's a whole set of digitization that goes along with it. So maybe we could turn it over to the audience and answer some questions. What do you think? You and I can go on.
We can go on forever.
We can go on forever.
The ladder has many rungs, but I think we've covered
rungs.
the core.
Yeah, the core idea. All right, so
I'm hearing we're ready for some questions, maybe?
I think so, Catherine.
Awesome. So we do have one question on here from Nathan, one of our students at the university. And he asked, do you believe that blockchains provide a way for less stable or developed areas to develop quicker through providing trust in transactions?
Dante, you spoke to that a little bit earlier, so why don't you answer that?
I'm happy to start the answer there if you want, Pierre. And so the short answer is yes, but the yes and, right, the qualifier. The qualification, of course, is that in many of the lower developed environments that Pierre and I are speaking of right now, a condition precedent to leverage blockchain at scale is to have access to the internet and reliable internet. And so my analogy would be that if yes, we can cure many communicable diseases if people only wash their hands, but that presupposes access to clean water. And so in this environment, digital transformation, poverty alleviation with technology presupposes that the internet has reached the very populations you want to serve. And in there, we're not quite where we need to be yet.
Right. So there's another aspect to this, which is psychosocial. And Dante, you and I briefly mentioned it. The principal work that Heifer does, actually, which is aside from all the value chain analysis and the healthcare training and the agronomic training and everything else that we do, we really believe that unless the individuals within the community, the smallholder farmers, and the community as a whole is not psychologically prepared to actually take responsibility for self-reliance and self-accountability, nothing will happen. And we have this whole process we call values-based holistic community development. Mm-hmm. And it's based on 12 cornerstones and the discussion of values. And this takes months to begin the process. But the parallel to our economy, our society, is that the parallel that I often bring up is the 12-step program for alcoholism. Unless the individual is prepared to actually make a change in his or her own life, nothing happens. All interventions will fail. Similarly, when we get to communities that have been subject to generational poverty, their view of the world is very fatalistic. Karma. This is my life. I'm just destined to be poor because that is what's happened to me. That's not true, of course. And we're astonishingly successful. I'm actually working with the University of Arkansas at Little Rock on a group of people in the communication group to help us think through and understand, based on modern psychological theory, what is actually happening in the process that we're implementing. So, what Dante presented in terms of the importance of you've got to have electricity, you've got to have roads, you've got to have water, you've got to have basic infrastructure to do all this thing, and you have to have the psychological preparation to do it.
I love that answer. Yeah, thank you both for addressing that. We have one, and this may be a little bit more pointed for you, Dante. Is FEMA utilizing blockchain at the present time? Has it been helpful with disaster recovery? And what do you see looking forward?
Yeah, so the qualifier, of course, is that, in a federal advisory capacity, I don't speak on behalf of the agency, but last year, in the set of recommendations that my colleagues and I on the National Advisory Council submit, we included a recommendation on the development and deployment of a national blockchain-based land registry, in no small measure for the very type of disaster scenarios that we saw in Paradise, California, or Houston, or San Juan, Puerto Rico, and the whole island of Puerto Rico for that matter. It was very hard for FEMA support to identify the valid homeowner and property owner. Think about your own property insurance. How often do you have your property policy handy if your house, God forbid, burnt down. And so a blockchain-based land registry would effectively have an off-site business continuity record-keeping capability. So this is at the idea stage, but hopefully it's something that private insurers and others, and maybe even at the city and community level, can be deployed.
Great.
So who would run a system like that? Would it be Dante? Would that be FEMA itself?
I'm thinking some of the geniuses at the University of Arkansas could deploy it. And this is, by the way, Pierre, and I don't say this lightly, this is why open source technology is vitally important. In the context of COVID-19, what a shame it would be if one city built a phenomenal COVID tracking app, but then did it in a manner where the code base was locked. I think the part of the value of an open source platform is that you can get 80% solutions to the hands of developers and others, so we're not reinventing the proverbial wheel. Bearing in mind, part of the Libra project is also espousing this open source model as well, to enable people to develop on the network over time.
Well, I will say that we do have a lot of students very interested in social good use cases. So that's definitely a popular topic here. We do have another student question, kind of on that same topic of land rights that you were discussing. So the question from Matthew Showman is whether tokenized land rights, how do they work with blockchain? How does it live on the internet, and how is it connected with phones? If you could maybe just kind of give us a little bit better picture of what this looks like in a practical sense.
Sure. So I'm happy to start there, and obviously Pierre, please add as needed. So there was a fascinating blockchain-based company out of New York called Fluidity that successfully did this and basically tokenized commercial real estate. And the concept of tokenization, think of it as the digital equivalent of what you would get in paper if you were the property owner. Except the difference is because the cost, the value of digital transformation is that the second iteration has a fractional cost of 0. And so today these transactions are cumbersome and heavy. So typically 1 or 2 owners or a real estate investment trust might be the principal owner, because it's very hard to fractionalize something like that. But in a tokenized environment, the fractional cost of the second small fractional ownership of that land is 0. Therefore, you could effectively have 100 people own one piece of land and have title to it, and the token is the representation of that. I think this is not yet an idea that has reached scale, in part because there's a lot of regulatory hurdles that stand in the way. But it is an idea that has enormous opportunities and enormous implications for all the very issues we discussed at the outset.
Yeah, it's interesting. And Catherine, actually, you're involved in this, so you probably can provide an answer too. And you may want to. From our point of view, the experiment that we're running right now in Honduras and Malawi is the willingness and the participation and the information of the farmers to actually share it. Is the information actually available? So what we've learned is that we've got to simplify it, very radically simplify the process of collecting information, and begin with, name, address, and even the land itself, the space of land, the acreage is very, it's not controversial, it's just unknown. And so we're having to develop some technologies on how to pace it out, or, we can't use sophisticated techniques like satellites or anything else, but it's just some very simple processes that allow for the data that's required for blockchain to operate effectively. Is it available? Even with a good willingness on the part of the farmers, they don't know. They just, this is what I've been farming forever, and this is what my father used to do, and I don't know if I own this corner or not. I think so. And then, of course, if you start doing that, the next door neighbor is going to say, wait a minute, let's have a conversation about who owns. I know you've been farming it for decades, but it's not really your, anyway, that kind of stuff. Catherine, do you have something to add?
Agree.
Because you're involved.
Well, I think the thing we want to focus on is the strength of blockchain is transparency in this situation. Yeah. And so when you're saying a farmer doesn't, the title may be there, but there's no transparency into these records. And so where blockchain really comes in and helps is, first of all, verifying that, maybe by the government, that person, this individual, this farmer owns this land or may lease this land and is entitled to that. And then it makes that available and viewable to others and reduces that fogginess of information and transparency is increased. So totally agree with you there. We have time for one more question. And I want to go back to the topic of payments just for a second. And this is from Josh Cox. So what is your opinion on blockchains or cryptocurrencies in areas like Yemen with hyperinflation, maybe some unrest in the government or lack of stable internet and infrastructure? How might these global payment systems affect these areas?
Yeah, that's a great question. And with deference to Pierre, if I can start the answer.
Sure.
So, that's the crux really of what we're trying to achieve with the Libra project, right? Is that we live in a world where more than 50% of the adult populations are subjected to a hyperinflationary domestic currency environment. And, marking the 75th anniversary of the UN this recently, just now, one of the key ways we pull people into the value chains of the world is through cross-border payments or remittances. It's a greater total cash flow than foreign direct investment and official government development aid, and it's a cash flow that goes into the real economy, into the hands of people. Yet our compliance systems around the world are such that countries are blacklisted. I hate the term, but it's a sad reality that in many respects, a country like Yemen might represent to a traditional banking or payment environment a net higher risk when some of these cash flows go south of the equator or south of the Mediterranean. And so a payment system that is mobile enabled, that could cut off the fundamental costs and introduce competition at those remittance corridors would be a big difference maker. And that's part of the reason we have members like Heifer International, Kiva, and a number of other members in the nonprofit domain in the association to help solve for last mile use cases and developing country use cases without sacrificing compliance or risk.
Yeah, I think you made a point that I just want to put some numbers to it. The overseas development aid that comes from USAID and DFID and all these other European, World Bank, et cetera, is about $160 billion a year. The volume of remittances coming in from the north, mostly the northern hemisphere, down to the south, the global south, is over $500 billion a year and growing. And as Dante made a note, it goes directly to the farmers. I have been in villages where it's clear that several of the family members are overseas sending remittances. The houses are in better shape, the roofs are in better shape. There's actually infrastructure that's been invested by the communities to actually make their lives better.
Gentlemen, I'm so sorry to move us along, but we have other guests lined up, and it was such a wonderful treat to have you here today and share your insight with us. Thank you so much again.
Thank you, Catherine.
And we encourage our students with unanswered questions, maybe try to connect Umbrella. But now is your time to enter your secret session word that we said during our introduction. And we're going to take a quick break, and we'll be back with our next speaker. Thank you both so much.
Thank you, Catherine. It was wonderful.